Alright guys, I'm back with another video. So this one is going to be an extension of what I did on my live stream, which is reaction to Marant's rants versus Hannah Reloaded here. It's a good conversation to have, you know, or debate or discussion, whatever it might be. I encourage you to rewatch that. If you haven't already, go ahead and watch it on Marant's channel. Now with this one is a prelude to that particular interview. This particular live stream is on Hannah Reloaded channel, and if you haven't subscribed to her, go ahead, subscribe to her if you want to give her some views. But this type of view about the GameStop and being the opposite side of the aisle, so to speak, is a good healthy debate, right? And it's even though she's a bit condescending at times because of her facial expression and all that stuff too, like it seems like she doesn't really understand where GameStop is going, which is fine. Not everybody's gonna understand that. Not everybody gonna have the vision moving forward. A lot of what leadership is leading in front, right? They're staying in front, so the follower don't necessarily see where the leader is going. So that's why you want to follow the right leader, right? Because you don't necessarily see the future or where the leader is leading you to. Now to Hannah's point though, in a minute here, that GameStop doesn't give them clear guidance, so that might make them a little bit nervous. But for people like me who invest in GameStop, we kind of see where Ryan Cohen wants to be, and it's in the letter, right? It's in the letter that he sent 3 years ago. So that vision is still there. It's just that, hey, it's take some time to bring it to completion, right? And just to remind people here, I'm going to remind people every time that Ryan Cohen just got into this company 3 years ago. So cut him some slack here. I mean, to done so much already in 3 years is a lot. But yeah, there's a lot more things needs to be done to the company in order to make the company profitable. But anyway, so that's just my introduction there. All right, sorry, I had to cut that out because I got interrupted. So let's listen in.
5 people. By the way, if the audio sounds better, I added a noise gate. Look at that, figuring things out to sound better. Cool beans. As long as it saved it still. Let me actually double check. It did. It saved my filters. We're good. Anyway, let's see what Marantz is up to before we get into the PP stuff. Oh, the GME thing. I need to point this out. The GME people are kind of freaking out because the stock jumped a bunch yesterday. It went up to $17 because, that happens sometimes. Stock goes up. And they're celebrating despite it being down year to date, year over year. Like, it's been down since the spike in 2021, and it's already settling back down from the 17 price yesterday and continuing to drop. Now it's down to 14.60.
So currently it's even down more because, oh no, actually a little bit up. So currently it's at 15.30. So of course, yeah, price go up, price come down. But from the point of view that, Hannah's trying to show you here is that, oh, since the price down, therefore the company is doing terrible things, right? And it's not necessarily true because, again, like this type of thing is psychological. It's just between two people who agree to sell in and out or buy into a certain stock because they believe otherwise, right? So, and it's a competition between who's right and who's wrong, who thinks that this price point is overvalued, how many people will actually think that this company is actually valuable. So again, they battle it out. Now, let me point out a little bit of a buzzword here. I'm going to use a buzzword right here, balance sheets. So what I did is just copy and paste this because I wanted to kind of show you a specific line item here. And one of the things I want to kind of compare is to the two like the same quarter but with different years, so from last year. So she pointed out the fact that last year it went down the price, went down 40%. And that's indicative of how terrible the company is doing, right? Let me try to show you otherwise, though. But don't take my word for it. Let's look at the number, and we'll come back to it to see if it's actually that bad. So revenue is down 4%. If you were to use this number to this number, that's down 4%. Okay, understandable. 4%. That's probably justified why the stock price went down 40%. Okay, sure, that's fine. But revenue is down. But wait a minute. Look at the gross profit, though. If you were to compare this number to this number, oh, it's kind of up. No, if you were to, not divide, but subtract the two number, you would see that they were able to increase their profit, the gross profit, by $100 million. Okay, that's a year. $100 million. That's not too bad, and that's not too good. Okay, and it depends on what side you're on. Okay, I'm just gonna show you the number here. So if you were to do a profit margin, what is it? 21, right? Okay, 21 is lower than what? 23.8. Okay, so they were to be able to increase it by 2% plus. Okay, more than 2% profit margin. To you, 2% may not seem that much, but 2% off of what, though? 2% off of that is equate to, okay, so let's do, you know what, let's do the math right now so that we know exactly. So I'm gonna do this minus, oops, sorry, this minus this number right here. That's negative. The reason why it's negative, it should be positive. So just keep that in mind. So that percentage times, now I'm gonna do a parenthesis just to make sure they use the correct operation here. So if you were to say 2% from what, though? Let's see. Which number should I use? The recent one or the, let me, 2% increase from $6.065 billion. Okay. So that equates to $166 million difference. Okay. I think if I use the other number, it's probably better because it's more accurate. Let me try this number here. $159 million difference. That 2% is $159 million. Let's use the lower number because, again, you underestimate it, right? You don't want to overhype anything. So $159 million different there. Is that not a good thing? It is a good thing. People, need to understand that. But let's look at the operating expenses. What is that? To me, based on my mental math right here, close to $300 million difference on the plus side. Okay? Not only that, what are they having right here? Interest income. So they have some sort of, income right there. Now, I know it's not that much. $10 million to you, it's probably not that much for a, multi-corporation, right? Multi-billion dollars corporation, but it's something, at least, right? Guess what? Last quarter, they only lost $2.8 million. So they could cover that by increasing marketable security, and which they did. So what did they do? They increased it by $50 million more in the last quarter, or close to $50 million. It's like 40 million something. But that's, again, it really doesn't matter. So this number is going to increase the next quarter. Instead of 9.7, you might see 11 or 12 million dollars right there. So at least they're using their money for something. Okay. Now, what else? What else am I trying to show you right here? Let's look at the net income right there. If you were to look at from this to this, what is that? $400 million swing right there. Now, I'm not saying that it's going to be $400 million. Now, if you do another $400 million swing right there, again, what are you going to get? You're going to get negative $89 million or so. Let's say negative $90 million. So even if they're losing negative $9 million, $90 million, they're going to, hopefully lose less. They're still losing less, right? But what usually happen in this particular scenario here? Why are they, kind of on the third quarter, their expenses a lot higher? Like, from here, kind of the same amount of expense, right? So if you extrapolate that, the same thing might happen here, where, they were able to, make the operating expense the same number over here. Again, everything is not constant. Obviously, it's going to change, whatever. But they could do many things with this, balance sheets. They could either beef up their inventory in order to sell more in the upcoming, holiday or in Christmas right now, right? Black Friday or whatever, they're ramping up their inventory in order to sell you goods and services, hopefully, right? In the future. But currently they're selling hardwares, software, they're selling collectibles. So those are and then of course they have digital store now where you could download your game digitally. So again, on Steam and all that stuff, yeah, you could get it through GameStop. So why would you want to get it through GameStop? Well, sometimes they have deals like this. And I show you already, when you have deals in GameStop, you can be sure that it's actual deals on GameStop. Okay, some corporation out there, they tell you it's a deal, but it's actually not a deal. Who? Well, if you watch my other video, you will see, or my live stream, you would see which one that is. And that is the integrity of GameStop. Currently, there's no sale at the moment, but if you want to save 10% on the, buy online or pick up in store, if you spend $250 or more. So this type of deals happens all the time. And now you could buy it digitally. You don't have to, go physical anymore. For those of you who love downloading digitally, go ahead, do it, But anyway, so let me go through this one.
Well, anyway, they're of course going to count their chickens before they hatch. That'll be interesting. Take a look.
Guys, I know it's late night and GameStop's still running. I'm watching it on Robinhood.
Surprised I'm not doing Kiss Under Death Party. I respect people who do that and want to talk about what a shitbag he is. Was. I'd prefer to just not think about him anymore. I think that's the best. Well, not necessarily. It's good to remember evil people so history doesn't repeat itself, I guess. But I don't care to take another second of my life thinking about that man. He's dead. How many lives did he destroy? He's not worth remembering other than as a black spot on history. Don't be like him. That's the moral.
It's 24 hours
73 motorcycle modem. Thank you for 16 months.
over there. 1607.
GameStop earnings will be positive, just saying. Oh yeah, probably. Yeah, this quarter they're going to be for sure. Ryan Cohen did a ridiculous amount of cutting in terms of like benefits, hours, stuff like that. He is very clearly trying to, as his first quarter as the CEO, manufacture the most successful quarter they've had in years. That way it gives the impression, wow, he's doing really well, when in reality all he's done is clear cut the forest where he's supposed to be, maintaining the trees,
Wait a minute. So that's a bad thing? Now, I think you're misunderstanding what Ryan Cohen is doing. Perhaps you are, right? If you could assume that he's doing terrible for the company, I could also assume differently. Now, I just show you the balance sheets, right? So to me, if you think that he's doing terrible, why is that there are, good numbers coming out of this. If he's actually doing worse, then the number should show that, no? If the things that he's doing is terrible for the company, then the profit margin should have been lower for gross profit margin anyway. And the fact that they're, the real right here, when you account for net income versus the gross profit, then this ratio would have been higher, meaning they're losing more money. See this one? 8% right here. Right now, they're only losing 1.7%. So again, those type of narrative, it's a good thing that he's cutting at the very least, and he's trying to manufacture the most successful quarter in history of GameStop. You're talking about it as if it's a bad thing. And the analogy that you're using, that he's clearing the forest, is that perhaps you don't realize that the area in which he's clearing out, it's not the actual forest. It's just a part of the forest of where it needs to be cut. Perhaps the part that you're thinking is the forest is the part where there's only tree trunk there. It's dead tree. It needs to be cut so that the rest of the forest, which you think that it's not existent, right? Because you don't see beyond what Ryan Cohen is cutting, so to speak. You only see that one spot that he's cutting. Zoom out. When in doubt, zoom out. That's all I'm asking.
Well, he's making short-term decisions to manufacture profit, or at least a higher profit than they would actually have without all these cuts, in order to make it look better.
It's a good thing. That's a good thing.
7 right now. Aftermarket already ran 30% today. What a hell of a run, but we know
those cuts didn't happen until this quarter. That's fair, and that's going to reflect in the fourth quarter as well. But it doesn't really matter, because those things can still be applied in some ways, accounting-wise, to previous quarters. Like, they can say, what am I trying to say here? I always get too deep in the weeds with the GME stuff. Let me go back for a second. Ryan Cohen is going to try his best to make the company look profitable. And they're probably going to have a small profit this quarter, as well as a slightly larger one next quarter, because we're in December. That's usually the best quarter, as is the case with all retail.
Okay. So, go on. I thought you said that they're not going to be profitable. They're not profitable. You're going to say it in a minute, because I know why. I know the interview. I already watched it. But, so now you're saying they're going to be profitable? Okay, go on.
The gains, the rather increase in profit that he's going to try and show, it's a thing, but it's not indicative of a strong future for the company.
Okay, so profit is not indicative of growing in the future? But what? Let me listen to this again, because it makes no sense.
Reflect in the fourth quarter as well, but it doesn't really matter, because those things can still be applied in some ways, accounting-wise, to previous quarters. Like, they can say, what am I trying to say here? I always get too deep in the weeds with the GME stuff. Let me go back for a second. Ryan Cohen is going to try his best to make the company look profitable. And they're probably going to have a small profit this quarter, as well as a slightly larger one next quarter, because we're in December. That's usually the best quarter, as is the case with all retail. The gains, the rather increase in profit that he's going to try and show, it's a thing, but it's not indicative of a strong future for the company. Let me put it that way. Because he's making our short-term gain that are going to look good on paper, if you ignore the entire context in which the business is happening and the effect that these cuts and other decisions by him are going to make on the future of the company as a whole.
Oh, okay. So it's a bit hard for me to understand this point of view here, because it makes no sense to me. Again, those cut is going to translate in profit. When you are in profit and no debt, you could leverage that profit onto the future. And I don't understand why you think that this cut doesn't translate to the future growth of the company because it's just short-term gain. Makes no sense. And I know, let me continue to listen a little bit. Maybe you are going to explain it later.
So yes, I would agree. This upcoming, on the 6th, I believe they're doing their earnings. I'd imagine they're going to show a profit somewhere in the 1 to 50 million range. That's a guess. I know it's a big range, but it just depends. I don't know how much
1 to 2.
Show a small profit. it's still going to be eclipsed by their losses in previous quarters and subsequent quarters that are going to happen after fourth quarter this year. Like,
okay, so you're saying that next quarter they're going to post close to $1 to $50 million. Okay, so if they were to be profitable, that $1 to $50 million, where do you think they're going to use that $50 million? To grow the company, no? To make the company better, no? In the future? So how is that not beneficial for the future of the company?
like in first, second, third quarter next year are probably going to be a bloodbath, but he'll get a couple profitable quarters, and this is speculative. If I were a GameStop person,
why is it going to be a bloodbath if they've been cutting to the point where they're becoming profitable in, third quarter? So first quarter of next year, what are you assuming is going to happen? Hold on, let me see. This is quarter one right here. So quarter one, let me highlight it in red or orange or whatever. Quarter one, you're saying that they're going to lose more money than this one? I mean, if you were to see the trend right here, that's a $250 million swing right there. Right? And what makes you think that they're going to increase their cost of revenue from here, from this one to this one? I thought they're cutting store, no? They're operating a lower amount of store, no? Am I dreaming when I hear about this stuff? You're saying that they're cutting and cutting, but you're saying that come first quarter, it's going to be a bloodbath. You need to support that based on, the trend of the balance sheet. I know I'm using the buzzword here, but, please explain that. Your next video, perhaps.
I would be horrified that he's doing all these cuts right now, because to me, it looks like he's trying to make the company look like he's fixing it, make it look like he's going to, look, Q3 was profitable, Q4 was profitable, I fixed the company, all right, bye everyone, and then he sells and leaves because he, at least perception-wise, fixed the company, when in reality he's making short-sighted decisions that are not doing anything to actually fix the longevity of the business or the sustainability of the outdated business model. He just wants to cut until the revenue exceeds all their expenses. The problem is a lot of those expenses were necessary for the health of the company.
Wait. So you're assuming that Ryan Cohen's gonna sell out after the 2-quarter profitable company. Like, what basis do you have? Right? Like, it seems like you're taking on that, he's gonna dump because again he couldn't make it. It's like he's here for the long term, right? Like, he's a long-term investor type of guy. What makes you think that he's gonna be here for 3 years and then just like bye? What? So that's speculation right there, obviously, right? It's very speculative. So I could speculate even a better one, right? I could do that, right? So I bet you anything, Ryan Cohen's going to be here for a long term. At least 10 years of his life is going to be dedicated to make this company better. I don't know how it's going to be, but mark my word, he's going to be here at least 10 years because he's a long-term type of guy. If you listen to his interview for Chewy and whatever, he's a very, very long-term thinker. He's not short-term. And as far as the cutting until they can't cut anymore, that's ridiculous too. You're assuming that they're going to continue to cut to the point where they only have 2 stores in the nation. That's ridiculous. Eventually they're going to stop cutting and they're about to expand soon, right? But again, it's going to take some time for them to do that. And it's going to take some assessment for them to do that. It's going to take some kind of, hey, what are we going to do here moving forward before he's going to make any, rash decision in order to, please people like you? Like, really? Ryan Cohen doesn't think about short terms that way, in my opinion, anyway, right? I'm speculating too, right? If you're speculating that he's going to dump in 2 quarters, I could speculate that he's going to stay 10 years from now.
What this is.
I actually do like having you on, by the way, Uber Tendies. Like, you're one of the meme stock people who's come on, and like I feel like I can talk about this without like it being weird and like angry because I don't want that. I think that's unreasonable. We're talking about
Sure.
stock in GameStop or Bed Bath & Beyond, which doesn't exist anymore. It's not something worth getting worked up about. So I appreciate your,
Yeah,
like,
sure. I agree.
I really do.
Right before earnings comes out, what are you going to do? Close your position? Rest in peace to Charlie Munger. That was sad after reading that. 99 years old, lived a good life. Like I said, you can't outlive time. And right here, GameStop. These shorts can't outlive time. They're never going to make it, guys. You're talking about from 11 to 16 in one day.
Again, the thesis here is that you believe that the company is incredibly short-sold. Not just short-sold, but you specifically believe that it is, like, illegally short-sold through synthetic shorts.
It doesn't have to be illegal for it to be short sold to oblivion. Okay. Now, I don't know if you've seen this website before, Hannah. Look, I know you probably won't look at it and all that stuff. I'm curious to see what you think about all of these short exempt or short volume being reported. Now, keyword being reported. The stuff that you don't get to see is what's happening behind closed door. I'm not even talking about that, but even the volume that is being reported is ridiculous. Now, you might think that, oh, okay, well, it's deserving to be so. Okay, sure. If you think it's deserving to being shorted like oblivion, when you're shorting stock, what do? I'm sure you know this mechanism very well. You are telling me that GameStop is overvalued at $40 a share. I think that it could go higher than $40. I give you $40 for my share, and these people don't buy my share for me because they think it's going to go down. Okay? Now, or they short sold it. They borrow some share from other people to sell that share to me at $40. Okay? Now, they make money when the share went down to 15, right? Technically, they should have buy back in, but what if they have the same narrative as you do, saying that, oh, GameStop doesn't deserve to be at 15. I think it's going to go lower. So they hold that position even lower. Now, how long do you think they're going to hold on to that position until they're going to buy the share back to me? It's going to take them a long time, right? Now, the fundamental of the company, again, this price action, as you could see right here, Hannah, as you see right there, it could happen in a day. 40% up, 20% up. It could happen in a day. And this is what it's called short squeeze. You probably was aware of that a long time ago. So the people that took my money at $20 or even at $11, they thought it was going to go lower, even below $11. They have not buy my share back. What happened when it goes up to $15? So now they're down $4 a share, right? No? And $4 a share at $3 million? I mean, 3 million shares being shorted? Oops, sorry. Actually, that's a total volume. But if you were to do the volume right here, look at this. This is when the share was at $17 a share. So at $17 a share, as you pointed out, that run right there, they are being, the volume being shorted is $25 million being shorted. Okay, I mean 25 shares, 25 million shares being shorted that day. So are you telling me that this, when it goes above 19, they're not going to panic? Right? And this is why they don't allow it to go up. And you know why? How? Off exchange. Okay. Dark pool. I'm sure you're familiar with dark pool. If you don't, this is what dark pool is. 50%, 40%. This gray here is off exchange, non-exempt, off exchange, exempt. So those volume is off exchange, meaning that you don't get to see the price action as it should, as you should see the price action of anything. And so again, those mechanisms exist, and this is why you see this type of thing without even the illegal stuff that you don't see. You know, I'm sure you're aware of the total return swap, you know, being swapped in and out between big institution out there that bet against each other, right? And they want to make money on top of the price movement of what's happening here. And so, yeah, again, they don't have to be illegally doing this in order to make GameStop doing what it does in 29.
Does not hold up to any amount of scrutiny. So if your thesis is based on you need there to be a bunch of short sellers, like a ton, that are illegally shorting the stock in order for your thesis to work, you already failed because your initial premise is wrong.
They don't need to. They don't need that. All they need is this. And it's going to resolve by itself. So, no.
Tomorrow, 20? What's the next day? 25, 30? You don't think
this is one great Kissinger thing? Oh God, what is it?
Oh yeah. I'm gonna fast forward to this part right here.
Cuisines and stuff. And in one of his books, or
sorry, let me fast forward.
Story thing is that in 2021 it peaked because there was basically a big meme about it that was also coupled with an actual position where short sellers were pretty over leveraged on their positions in GameStop. Fair enough, but the big spike was mostly because of people piling in for memes, and then ever since then it has just been a cascading failure of price dropping. Like, there's nothing about this that you can say is a narrative about, oh, little dips. No.
That's unfair. You know why? Because, again, with all of that run, Brian Cohen was able to do this. Yes, it's as a result of that, but I bet you anything he influenced the board of director to sell some shares at the top without even, you know, crater the price action, because they were able to sell it. And guess what? That money that they're raising, which was around $1.1 billion at the time, that's why they're able to increase shareholder equity and all that stuff. And you see the history there. But if you were to look into here, right here, you see this? This is when Brian Cohen was able to, or, you know, the board of director leadership at the time was able to sell into the market at the market offering to sell in order to increase shareholder equity. So $1.1 billion worth of that money went into GameStop because of that. Now, as far as the cascading of failure that happened, it's just the price action. Again, price is psychological. Okay? It's not indicative of what the actual company is doing as shown here. Because the balance sheet is better, not worse. Okay?
It's not been trading sideways. It's not going up and down. It's been going consistently down since 2021.
Okay, so if you find company that consistently doing better fundamentally, meaning the balance sheet's showing profit, right, from negative $500 million to profitability, that's something, no? That's not... Is that an act of magic? Or somebody did something to get there? You know? But anyway, my point is that if you see the price down while the fundamental of the company is doing better, what are you doing? That's the opportunity right there. You know, the opportunity is what you don't see in front of you. You only look back, you know. It's almost like you're driving forward, but you're looking in the back rear mirror. For what? You're going to hit something. You're not going to be able to move forward to your destination whatsoever because you're looking back.
because
Holly has his cracker. Thanks for 22 months. Says, hello all. Sorry I'm late. No problem. One demerit.
saw it run, and I was like, you know what? Hopefully, I just take GameStop with me. My original GameStop shirt, the one I wore in my first video ever. Yeah, I own this thing, and I love it, and I love to see it happen. But fundamentals of this company are going to shine through once earnings comes. I'm excited tonight. I can barely sleep, only because I want to see what's going to happen tomorrow.
It seems like the only fundamentals, and to be clear, when I'm talking about Marantz versus like the PP people, there is a difference, and here's the difference. Marantz treats me like a human being. So I will do the same in return.
True.
I try to do the same for the PP people, but you know, there's a little stank and sarcasm on it because they are overall kind of dicks. But Marantz, as much as I disagree with him, has been kind to me, right? And I think that's fair. Someone's kind to you, be kind to them. I will do the same here. Marantz seems to think that the only fundamentals that matter are how much cash on hand does the company have, and how much debt does it have. Now, don't get me wrong, those are important fundamentals. In many cases, they can be the cornerstones of problems or successes in businesses. But it's
Okay, so if you gloating on that facts, why did GameStop doesn't make sense to you right now. Right now, they're cleaning the balance sheet and make it better foundation for the next step. Whatever that next step is, right? I don't care if they're failing the next step. At the very least, they're not burning cash, or at least they have something to go off of. Again, foundation is being laid right now, and they're making sure each bricks, okay, is being laid just so that it's going to be strong for the next level, okay?
It's not the totality of the picture. You're missing the forest for the trees, and I get it. I get why you like those trees. They're very good for your narrative. But the forest is telling a different story, and the story it's telling is, hey, yeah, they can be profitable at small scale, maybe, but right now physical games are dying. There is...
Why you keep, like, what? Just physical game all the time? Like, really? You don't see what's happening here? Like, they're pivoting, at the very least they're selling digital. Copy, right here. What? You still have that narrative. What's going on with you?
Isn't a stable future in your company making money as a company that pretty much has a history of only making money by selling used games. And I've talked to
That's not true anymore, because their biggest profit right now, as we speak, second quarter, last quarter reporting, the biggest profit comes from hardware.
GameStop people who have said, like, Uber attendees I think has said, like, oh, do you know what they make the most money on? Hardware. Yes. That wasn't the case when they were their most profitable.
They could expand that catalog more in the future when the economy is going better. Again, the reason why they don't sell as much hardware, perhaps people are not aware of it at the moment. They don't trust the brand because of people like you know, bringing stuff up from 10 years ago, 5 years ago. Whatever the bad leadership that happens, you know, back then, you bring the same narrative over and over again. So it takes some time to bring new people coming in. It's like, oh, wait a minute, GameStop actually sell this? What? GameStop don't just sell used game anymore? Wait a minute, I could buy, hold on. Is this PC gaming? I could buy PC? The actual PC? Wait a minute, really? They sell this stuff? You see what I mean? So they're expanding that, and of course, it's not just going to be limited to physical game. Right? They're going to sell that too, obviously, pre-owned right there. You know, you could do anything. Look, you could buy anything. So eventually, it's going to be electronic based. It's going to be, you know, gamer centric, right? Hopefully, you know, you could, as a gamer, you could go buy what? Okay, skin. Okay, let me see. There we go. Skin for your physical item right there. Boom, done. Controller, you know, whatever it might be that the gamer itself or themselves needs. You know what else do gamer needs? Camera. Okay, for live stream. Okay, there you go. You know, they have extended their catalog. It's not just used game anymore. So please stop with that narrative.
That's a bad thing. They'll say, oh, they don't rely on used games for their profit. Their most profitable sector has been hardware for years. That's bad, because their entire business model is circled around the used games because they have such a big margin on them. It's no longer as profitable as the hardware, not because all of a sudden hardware made them way more money, but because the used game sector, the backbone of their business, stopped being profitable. That's
not true. It's like they could have the backbone of their company coming hardware. Let's say they're able to sell, let's ballpark here. How about $1 billion worth of hardware? If you were to do a profit margin of, let's say, 18% there, right? If they're able to achieve that, you know, an 18% profit margin, they are going to do wonder. 18% is a lot, okay? So again, like your narrative, it's annualized based on inflation. It's And all of that too, you know, like it increase in the number of dollars, you know, amount. And the percentage wise is what makes the difference. And on top of that, you're going to increase more membership. You know, the reason why people, you know, being the pro member is because you have so much perk, rewards, 2% cash back, you know, all of that amazingness, you know, you could save. And this is value added. This is the value that GameStop is trying to create. And this type of value is what make Amazon the biggest thing ever. Now, the difference between Amazon and GameStop is the fact that all game brand, modern icon, not quite sure that all clearance, see? So 5%, you get more for your trading value, right? While people are, you know, it's just, what? You think that this is not important in growing the business? It's like, oh, sorry, you are mistaken. You know, this type of thing matters. And it's going to take time. I know. People are not going to be believing me until it's too late already. And people like Hannah, she's going to demonstrate in a minute that she doesn't really understand what the balance sheet is doing. That's why she's saying it's a buzzword. It's like, okay.
Problem. That would be like saying, let's say McDonald's was going out of business, right? Let's say McDonald's was doing very poorly for some reason. This is just a random example. And their best seller is the Big Mac, right? Their best seller is the Big Mac. And I say, oh, wow, the company hasn't been doing very well. I don't think there's a future in the Big Mac market. People hate Big Macs for some reason. You can digitally download Big Macs. So they don't want to buy physical Big Macs and trade them in at the store anymore. So you say, but they sell French fries. Okay, that's true. Maybe they do sell French fries, and maybe that's the thing they make the most money on now. But the problem is right now they aren't profitable year over year because they're relying on the French fries instead of their former biggest seller, Le Big Mac. See what I mean? You can't say, well, they make most of their money now on hardware without recognizing that's because their business model of selling used games has collapsed, and that's why they have had loss after loss after loss after loss. I don't think they've had a profitable year. Is it 7 years? Has it been 7 years?
No, it's not 7 years. I'll show you in a minute, but let me continue a little bit.
They've had a profitable year? Yeah, that's not sustainable. It's great if you don't have debts and you have cash on hand, but if your primary business model has entirely collapsed and you're relying on a secondary product that has never had huge margins for you, that isn't profitable for you currently, you're kind of fucked, aren't you? Because the collapse of, like, used gaming hasn't even ended. It's an ongoing process. Like, I think right now 80% or so of video games that are new are sold digitally. That's not good for GameStop. It's just not.
I mean, to that analogy of like Big Mac is their best seller and all that stuff, and then selling French fries are, you know, the next step. It's BS, right? The reason why it's BS is because, okay, let's use that analogy. What if McDonald's could find a different way to sell that French fries in a better, you know, a better conditioned French fries? And they could sell so much, you know, French fries to the point where that profit margin is going to be sound enough for the company to be profitable. You know, they're selling massive amount of it. You know, why? Because they have value creation. Let's say, you know, they're able to make French fries taste better, adding more flavor to French fries. You know, you could do nacho fries. You could do, you know, chocolate coated fries, you know, or you could do a customized fry catering to people. So because, why? Because that's their business model is to delight customer. That is what Ryan Cohen is trying to say. And he wrote that 3 years ago on that letter to the public, laying out the plan. And it has been coming through fruition. And look at this. This value created by this membership is it's immense. Because you could get so many things for this, for the price of your goods and services, or goods. that when you buy from GameStop, you would have good quality, or at the very least, you know, being transparent. It's like, hey, it's gonna be a refurbish. Here's what's gonna happen. Here's what you're gonna get, and you know, whatever is available for you, you're gonna get that one, right? So again, the transparency, the customer service is gonna be a little bit better than it used to be, right? So, by the way, so let me show you what Anna was saying, that GameStop hasn't been profitable for what? 7 years? No, that's not true. You know why? Because if you look at the last profitable year was this year right here. Right here. $34 million in the plus side, right? Now, if you look at this one right here, 2019 to this 3 years, it was coronavirus and people were locking up, and of course, you know, there's a lot of stuff. But if you look at let's see, the operating income, revenue minus operating expenses. So the expenses somehow was, I think it shows in a different way. It was expressed in a different way. Okay, so if you look at 2020 right here, right? Now, how do I know it's profitable? Because the cash flow. Okay, so if you look at cash flow, it was positive last quarter, 2020. Okay, and it was positive right here, $250 million being in the positive, meaning that they are actually doing well. Over here, $300 million. Over here, $390 million right there. So if you were to look at the income right here, boom, then it wasn't 7 years ago. It was approximately 6 years. Okay, if you're looking at the income. However, if you look at the cash flow, the last profitable year was actually last quarter, right there. Right? Now, net income is a little bit different because net income includes the expenses that happens in whatever the finance is, right? Now, we all know that GameStop has goodwill. Okay, so right here, they used to have more than $2 billion at some point in their in the history of GameStop, right? But if you were to look at this time period right here, those amount was burning off year over year. So from here to here, 100 million, from here 0, from here to here is close to $1.3 million right there being burned off. That's why you see this egregious amount of loss being shown on the balance sheets. So technically, the loss does not come from the operation side. It comes from the impairment on goodwill. Why impairment? Because the price of GameStop was lower than the actual market cap of GameStop was lower than the goodwill price. Therefore, they occurred close to $1 billion worth of surcharge, so to speak. So that's why you see these two has been, diminishing. The fact that they come from $350 million to this price point right here, net income, was not due to Corona, so to speak. It's just due to goodwill impairment for whatever reason, right? And again, those type of things, you need to kind of take a look at it on the, you know, like zoom out. You know, if you don't understand what this is, I suggest watch Moran's. You know, he's a lot more knowledgeable about this type of thing, but you would be better for it. You'd be a better investor in terms of that. But anyway, so let's move on. I know it's like close to 1 hour. I'm gonna go on in maybe 5 more minutes.
It just isn't. There's still a place to go too. That means there are some people still buying physical. They won't be forever.
Okay, so I'm gonna cut a whole chunk there. Not to say that it's not a good point. I'm gonna address it a little bit here. Now, what she said earlier is that GameStop is not doing many things in order to you know, grow the company the right way and all that stuff. In her opinion, they should go back to retro gaming, you know, console or whatever, so that the physical media aspect of it is going to keep in the company, which I don't know. I feel like I disagree with that, because the future is in the blockchain. The future is owning your own digital, you know, goods or digital footprint, whatever it may seem like it is. Now I'm gonna cut a little bit here because I'm kind of short on time here. You know, she did bring a good point right here. You know, the fact that GameStop might have trouble doing some rebranding and all that stuff, but I think, you know, that's trivial. It's not really, you know, a point of attack, so to speak, because to me the big money comes from building a platform like Player, right? So when you build a platform for people to come in, using the leverage of the brand name GameStop itself, is going to be massive, much more massive than any other, you know, revenue, whether selling physical game or used physical game or not, hardware, collectible and all that stuff. Now to her point though, she said that, you know, collectible is not a way to go. I tend to disagree with that. You know, of course they could work in tandem. Collectible is a big part of GameStop, you know, kind of brand, because you could only buy Funko Pop from GameStop, right? And so when you're able to kind of like take on that ownership there, you know, you could only get it from GameStop. Therefore, GameStop is the only place that you could get it. More and more people are going to go and shop there. Otherwise, you won't be able to collect Funko Pop. Now, collectible though, there are people who buy it just to collect whatever they need to, you know, put it on their wall because they love to see those type of collection. So again, you know, there's a market for that. As far as expanding that market, of course, they're gonna try to expand it as much as they can. If not, there are other avenue out there that is much better captured that particular you know, a different type of user, so to speak, or shopper, buyers of the product of the company. So they're doing things. It's just that they're not telling you what they're doing. And I think, you know, as far as like showing me what leadership is doing, as far as like now that they are doing things, they're just not telling you what they're doing. You know, and if you don't like to invest like that, then don't invest in it. You know, it's not for the faint of heart. This type of company, you know, is going to require you to believe in it on the long term. And so, you know, it's very exhausting for me to kind of like showing you this over and over again, because again, you know, this is the buzzword here. Balance sheet matters. It really doesn't matter what Ryan Cohen's doing, as long as they keep showing good number. I'm all for it, you know. You know, there's many different ways to get to high profitability, to get high growth. and all that stuff. But it all takes time. Remember, you know, Amazon cannot be Amazon in 3 years. Okay? Like, nobody could be Amazon in 3 years. Even Amazon cannot be Amazon in 3 years. So I'll just end it there. Thank you for watching. And yeah, this is a long reaction video, but I encourage you to watch the whole live stream here. She had some good points there, but I just disagree with most of it. So, all right, I will see you later. Bye.